Good morning, everyone. I have with me Christopher Flinos, the CEO of Hayvn.
Hayvn is a digital asset focused business. We do four things. We do trading. So people send us fiat, send us crypto, convert it to other cryptos. But most of our business is people sending us fiat or crypto and us doing the conversion. They call that the fiat on-off ramp. We have a payments business where we provide merchants and some of the biggest companies around the world with the ability to receive payment in cryptocurrency from their clients. And that's one of our most sort of high growth, quite exciting businesses. We're also a regulated custodian. In the world post FTX, people are now worried about where their coins are kept. And that sort of the ability to provide custody services to our clients within a regulated environment is becoming more and more important. The fourth thing that we do is asset management. So a number of our clients don't want to pick their own coins. They don't want to pick their own investment strategies. And so we provide investment strategies for them on their behalf, and they can invest into one of our funds. So those are the four sort of revenue producing pillars that make up Hayvn. We're much more of an institutional voice and an institutional sort of focused and a business, corporate and institutional focused company. We don't have a retail arm. So we are a little bit under the radar in terms of needing to make noise and needing to put ads and needing to tell everybody about us. We've quietly gone about building, probably the Middle East's biggest business when it comes to virtual assets. But we stay well out of a lot of the press and just focus on executing on our business plan. So we're now 50 people strong globally. We have offices around the world. Our clients are global. Within the Middle East, within the market in MENA, the ADGM is our regulatory home and has been for quite a while. And we have a fairly strong Middle Eastern business providing support to some of the sort of the biggest companies across the Middle East. So that's what we are, Walid.
Thank you for this information. Christopher, I would love to ask, how is it the vision at the beginning that led you to go to this path instead of where I saw everybody rushing to the regulators trying to get a full-fledged exchange license? So Hayvn chose another path, and somehow we see now Hayvn floating and operating and growing, while the rest of the players in the market are still somewhere not operating, not in an operational stage.
Yeah. Look, I think in hindsight, it's fine to tell everyone how amazing you are and all the great decisions that you've made. They're quite easy. At the time, I never wanted to do an exchange. I come from Merrill Lynch. I have an investment banking background. I think exchanges are more marketing, scale, size, and it was a very, very crowded marketplace when it came to the exchange side of the business. The reason that we set up Hayvn, most people sort of look at why did you set it up to solve a problem, or that's how people tend to talk about their startups. But it wasn't. It was simply because we felt that the blockchain and the cryptocurrencies that are built on the blockchain have the ability to really transform the way the world interacts with money. So we saw a technology and a way of transacting, which was going to change finance and sort of be the next revolution in finance. But everybody that was in finance hated it or was scared of it or didn't quite understand it. I've never met an asset class as hated as cryptocurrency. Yeah. It's fascinating. Nobody hates derivatives. Nobody hates FX markets, but everyone has an opinion on crypto, and they either sort of love it or they're either evangelists and are preaching it to everyone they meet in the street.
Two extremists.
Yeah, it's a very, very strange. So we sort of went, well, there has to be just a place in the middle where we can be a voice that sounds and looks institutional, that talks about banking, talks about regulation, talks about compliance, but provides digital asset services. And so that's where the origins of Hayvn sort of emerged, and the name itself, a safe haven. It was born out of a time where the market was in its infancy, and people were worried about governance and security, and it's continued, like even 3 or 4 years later now with what we saw last year with Luna and FTX and now Silvergate and everything in between. So our industry doesn't help itself. The thing that saves it is that it has the best technology. And this technology is going to change the way banks settle. It's going to change the way your debit card works, my credit card, the way payments work. And this doesn't mean that Bitcoin's going to win. It just means that the technology
the
will
underlying technology,
the transfer of monetary value. So whether it's central bank national currencies, or whether it's Bitcoin or any of the other coins that come along, the thousands of them that come along, that underlying technology is what always interested us. And that's the side of the market that we went to. Interestingly, post FTX, revenues, custody, all the businesses has really grown. Customers no longer want to know why you're regulated. They now demand it. So the market has come our way, but for a long time there, most people in the cryptocurrency universe were looking for the newest product, the highest leverage, the shiniest new toy. And I think over the last 12 months, post Luna, the industry has flushed out a little bit of this. And for Hayvn, look at what I read were our products: trading, payments, custody, asset management. There's nothing sexy. Yeah. We don't do leverage. I don't have a prop trading desk. I don't trust cryptocurrencies. I'm sure as hell not going to put my capital at risk when the price of Bitcoin can do what it does randomly because for whatever reason it does it. So we believe in the long-term technology, and we believe in the way that it's changing the financial system. And therefore, our business units are built around that, as opposed to trying to make as much money as we can as quickly as possible, which seems to be sort of the way early technologies and the way cryptocurrency evolved.
I hope so. So regarding the custody, and now whenever you go to the crypto people, and sure you will be hit by this, like not your key, not your money whatsoever. So now you are a custodian. You're holding digital assets for your investors. You're managing their wealth. What type of portfolio? What type of clients here we're talking about? Are we talking about institutional investors? Are we talking about big sovereign fund? Are we talking about or the crypto community? Because I'm sure that crypto community are not going to be much interested in that part.
Yeah, not your keys, not your money. I love that. I find it very funny. The entire banking ecosystem has survived for thousands of years and had people depositing their goods and their wealth with other institutions. The Swiss banking system has existed for hundreds of years, etc. The answer is not take your private keys and stick it on a ledger and put it underneath your bed. I think my grandmother used to do that with her money, and that probably didn't end well. So we sort of looked at
Hopefully
it and said,
you inherited some of that money.
No, I think I've got yeah, I got 5 olive groves. We sort our regulated, the people that need regulated custody are still not the individuals. The individuals are still coming to grips with moving their money off exchange and putting it onto platforms like us. So we have assets sitting on our balance sheet, which is client money in the form of crypto, which isn't technically sitting within custody. It's sitting within our wallet ecosystem. The ones that need custody are institutions that need to use a custodian for whatever they invest in. Institutions buy gold. you never see somebody going, not gold in your hand, not your gold. No, man, gold sits in a vault somewhere and you have a right to the gold and it trades, and it does it normally. The bonds don't sit in your drawer in the form of a bond certificate. They sit with a custodian. Equities sit with a custodian. Cryptocurrency sits with a custodian. So that's 99% of capital markets. Cryptocurrency was always operating on the fringes. And so the early movers in the existing crypto crowd never really got into that because it was built on libertarianism. It was built on principles of equality and fairness. And, hey, if we can all be our own bank, we won't need banks. There are things like that people say.
At the beginning, yes, for sure. Now everybody needs.
Yeah, which is gorgeous. When I forget my own PIN number, I sure as hell don't want to be a bank. We have mostly institutions that are custodians, that are clients of our custody business. We have a lot of token projects, interestingly. So when people create their own protocols and their own tokens, the liquidity float, the core float, is now sitting with regulated custodians, which is great because it's not sitting on exchange, it's not sitting in private ledgers. It's actually being demanded that it sits within a regulated custodian. Where we think it's going to go to next. So that's currently institutions and token projects are the two main clients of custodians globally. Those institutions, however, are mostly cryptocurrency focused institutions today. It's changing, but FTX threw a spanner in the works for about 6 to 9 months. The market's now sort of starting to recover to pre-FTX time in terms of institutional non-native crypto interest in the industry. So all the sovereign wealth funds that you spoke about, all the bigger family offices that don't have the risk tolerance of smaller family offices, they all got scared from FTX and they've all had a reset. It'll be interesting to see what Silvergate does to that at the moment, because that's not good news. And it'll be interesting what happens with Signature Bank going forward. Because now they're sort of the limelight falls on them. So from a regulated custody perspective, we hope over time it'll move more towards the traditional non-crypto investors who are coming into crypto demand it because they're used to that with all their other asset classes. There are certain elements within the existing crypto universe that will never use it, and that's fine. We don't target them. Yeah.
So for sure, crypto community will not like all your statements today. So
yeah, no, hey, I love them and I'm part of the industry. So let me put that on record. But they're not my customers. I'm trying to win the guys that previously hated crypto, that are controlling tens of millions, hundreds of millions of dollars of capital. And I'm standing in front of them in Frankfurt, in London, and I'm the one that's the face of cryptocurrency to these guys. And I'm there going, hey, relax. I'm in a suit. I worked at Merrill Lynch. Cryptocurrency. I have a regulated platform. You need to have some exposure to cryptocurrency. And so when you do it through a regulated platform, do it through people that you trust, that you that are transparent. And that, in my mind, is doing so much for the industry by bringing in external capital, because as the market cap of cryptocurrencies as a whole grows and grows and grows, it will spur more innovation. It'll spur more creativity. It'll result in greater integration into traditional markets and a bigger pie for all of us. So to all those people who think that they say a bunch of stuff that they disagree with, I get you. I hear you. Not apologizing. I'm speaking to somebody else when I talk. But it's going to be beneficial for the industry as a whole. So
I agree. I totally agree with it. So in your latest media announcement, you stressed a lot on the on-ramp, off-ramp capability of Hayvn, USD, even Dirham, AED. So now somehow I got the answer, and it's a very asset management operation. So, but if you want to elaborate more about that, especially whenever we're talking about USD, so where everybody is trying to be aware of that kind of pairing and that kind of transaction.
Yeah. So what's happening at the moment in the US is that the SEC and the Democrats are nailing cryptocurrencies.
Now we're talking politics.
Right? So
Yeah.
pressure builds on Silvergate, pressure builds on Signature, and they start pulling away from providing banking services to cryptocurrency businesses.
Unfortunately, yes.
Who were their clients? Companies like Hayvn, liquidity providers, the guys that move 90 to 95% of the circulation of cryptocurrency bank with big US banks. We bank with Signature Bank. We never bank with Silvergate. Lucky, I don't know. When we asked both of them, Signature came
We are
first.
twice lucky today.
Yeah, many years ago. Anyway, so this has resulted in a squeeze of so many big cryptocurrency liquidity providers, traders, that are responsible for bringing fiat into the crypto ecosystem, and likewise taking fiat out of the crypto ecosystem. It's an incredibly important lifeline into our industry. There's pressure on it. And over the course of the last 2 weeks, we had seen probably 10 different announcements from liquidity providers, exchanges. Binance, for example, a few weeks ago, warned that it can't do US dollar wires out. This is the US government choking cryptocurrency, and it's choking it where it can. And where can it get it? It gets it where our business sits. The ability to convert crypto into fiat and send wires throughout the systems. We send wires to our clients we probably send about 50 to 60 wires per day, average size of about $2 or $3 million. These wires go through SWIFT. And that's why you can talk about how crypto is changing the universe and how much faster it is, etc. But that part of the business relies on banking rails. And so the minute you're in that space, you're in a regulated space, they can see everything that you do. We have to clear KYC on every single one of these clients before the wire goes out. We do all that as a matter of business.
Yes.
But they're choking down on that US dollar component. And they're getting rid of any companies they're not happy with their regulation, they're not happy with their business models, because they're under pressure to drop their crypto assets under management, their crypto business as a percentage of the rest of what they do, because of pressure by the SEC. We came out this week and sort of reaffirmed our US dollar capabilities. It was in part to talk to existing clients, but also, I guess it was a cheeky way of saying, hey, if you're struggling to get fiat out of the ecosystem, come to Hayvn. So we're strong in US dollars. And because the dirham is pegged to the dollar, we're strong in dirhams as well. So we probably send millions of dollars into the UAE each day, and also take it the other way. So dirhams come to us and we convert it into cryptocurrency. It's the hardest part of the business, because dealing with banks, you're dealing with traditional finance, or TradFi, as they call it, and they don't move quickly. They move like they used to in the branch, and it's hard. We work in this awesome industry where we're innovating every day and everyone's doing something amazing, and then you have to pause and wait for the bank guy to come into the office, and that's fine. That's part of our business. So it's one of our strengths, and now it's becoming more rare because of the pressure that's going on in the US, Walid. So that's the background to that. Just
do you agree that the statement of this Bank of International Settlement, when he said that we won the first round of war with the cryptocurrency?
What did he say? Say that again.
They won as the legacy system, the banking system, that they won the war against cryptocurrency.
It's amazing the way they speak, isn't it?
Yeah.
The minute
I feel that he has he's backed by what SEC is doing and what's going to happen. They are living the idea of the pressure will be high and they will cripple this whole industry.
I mean, right. And when you think of it in that context, they look at our technology and they look at our industry, and it's a direct threat. That's the way they see it, as a direct threat. a lot of them don't see it. And this is part of our tone of voice and the way we talk to our clients and the way we talk to them. It's not going to break Swift. It's okay. You're still going to have your jobs. It's going to change the way a lot of things happen in banking. And over the course of the next 3, 5, 7, 10 years, things like the settlement of bonds, equities, the issuance of equities
It will be instant.
But all in token format. You're moving onto our ecosystem. But that's okay, because we're coming to you, and the two have to come together. So I find those sorts of statements incredibly unhelpful, because they reinforce the us versus them mentality, which is it's not the approach that's going to win. It doesn't win in anything. The correct approach is there are parts of the technology and the blockchain and of cryptocurrencies that are going to do wonders for the global banking system.
And the evolution of the whole system.
Exactly. So yeah, I agree. That sort of stuff, man, it's counterproductive and it's not helpful. And I really wish they wouldn't do it. But at the same time, our side of the industry,
we're doing a lot. We're doing a lot.
Some guy in shiny white sneakers is telling you how he's going to break the system and like we're all going to live in Ireland together. So yeah. But the problem is, when the Bank of International, that's fine at a crypto conference. When the president of the Bank of International Settlements says it, people listen, because these are proper political.
Especially he's really a big guy, so.
Exactly, man. Exactly. So yeah.
So let's move forward here, Christopher. So you picked to work with ADGM, one of the most maybe advanced regulatory environment, demanding, but somehow they did really an amazing job with setting the rules and the framework of virtual asset space in general. So how do you see the regulatory scene in UAE, taking into account VARA as a player? Now we're gonna go as well and see Ras Iraq are gonna be also in the market, where with ESCA is there as well as a national regulators, and sure the cherry on top of the cake, the central bank. So how do you see all this together?
So the cherry on top of the cake, you just said, is the key to making it all happen.
Yeah.
The central bank has not approved cryptocurrencies, and everybody can sing and dance and show you shiny toys. But until the central bank allows the banks to deal in cryptocurrencies or deal with them, there's going to be two sort of parallel economies running. And that's what we have at the moment within the UAE. So we have the Dubai government encouraging innovation, encouraging the whole blockchain community, and really trying to build out an ecosystem which is conducive to the development of these businesses. And nobody does it better than the UAE, right? Nobody can do a free zone better than us. Nobody can, it's the best place to do business. I've been there 15 years. It's magical for the way they make things happen. But then you've got, Malta, Estonia, Lithuania, Cyprus. Everyone tries to play that game of, I'm going to make it as easy as possible for you to set up here. The UAE has a great ecosystem for that. But from our perspective, we went with the ADGM because we need to be able to sit in front of our clients and tell them that our regulators are stable, strong, tough, and that we didn't just pick the easiest place we could to get a license, because we don't just have a license, we have a regulatory approval. And it's hard work, Walid.
I can imagine.
They're the most annoying bunch of people. It's their job, right? They're regulators. Banks deal with regulators all day. They've got departments that deal with departments. We now have a department that deals with our regulators there because that's the way it needs to happen. But no one and so that's why we went with ADGM, not to make our life easier, but to make our life harder so that then when I'm sitting in front of a client trying to convince them to make their first
It would be easier then.
$1 investment into crypto, they know that I didn't just fly out of Estonia. I didn't come out of the money laundering hub of Cyprus. And, hey, here's my license. Yeah, it's regulation. Yeah. There's none of that. It's very, very clear as to what we do because we need that for our customers. And so that's why I went with the ADGM. Now, Vara had a bit of a false start about 12 months ago. They got excited, did some press releases, and I don't think their core infrastructure was ready. So they sort of walked back a little. And now the latest Vara stuff that came out about a month ago, I think it was.
Yeah. There's a lot of similarity with ADGM.
Yeah, that was really good because it had ESCA backing. It was vigorous and strong, and it was very, very clear as to what it does. So I'm excited about Vara because I think it brings regulatory clarity to the UAE. I saw RAC's press release. Awesome. Yeah, it's about follow through and execution in terms of we're becoming a core regulatory hub. But I think that, we've got DMCC as well, right? Remember, they've still got their crypto sort of part.
Yeah, somehow entities in DMCC has to now reconfirm their license with Vara.
Yeah. So we have a number of different bodies that sort of work differently. But from a country perspective, there's a really big focus on it. There's a really big push to make sure that we create a blockchain and cryptocurrency ecosystem, which is very, very exciting. The ADGM has been consistent and consistently sort of moves ahead in what it does. So from our perspective, we went with them because we need the credibility that comes with being regulated by the toughest regulators. And it's worked for us because the brand of the ADGM across Middle East and North Africa is a really strong brand.
Yeah, I agree.
Yeah.
So what's the upcoming plans for Hayvn? If we are going to meet in a couple of months or by early next year, so what we are going to be talking about?
I'm with the board this week talking about that specific stuff. We will be making much more money in 6 months' time than we are today. We will be doing the same 4 businesses. We are going to focus on payments because the success that we've had in sort of the payments ecosystem, the amount of real estate transactions done using cryptocurrency has gone through the roof. The amount of yacht charters, boat charters. We did our first oil and gas transaction for a government entity in the GCC using cryptocurrency. That was in February. So these businesses and this aspect of it is really starting to grow. And so that's going to be the core focus for us, growing these 4 businesses, because my game plan is to IPO the business. I need to reach a certain amount of revenues per month so that I'm big enough to be able to IPO the business.
Yeah.
I'm expecting to hit that number December this year to January next year, and that will then kickstart the IPO process. So the game plan would be to IPO in second quarter of next year. That'll be our next capital raising event, but I need the scale of the business. So it's not about like innovation or making noises in the market. It's about just, and I've told the whole thing, everyone just go to work, just shut your mouths, go to work and make so much money and do the best job we can for our clients across these business units because the market has moved towards us in terms of regulation, in terms of the clients that are gravitating towards us. So that's what we're focused on, Walid. It's execution. I'm sorry, I sound like a normal sort of bank person as opposed to a crypto guy.
Yeah, actually you look like a banker, so
shut me down. Turn off my video or do something. But yeah, that's what I'm trying to do. I'm trying to make more. I'm trying to grow our client base. I don't need to hire many more people at the moment because we've got a full deck and we've got capacity to really push and grow. We're going to stay strong in trading. Assets under custody, we're at $50 million at the moment. I want that to triple by the end of the year. Asset management business is going to continue to grow. We only launched that about 6 weeks ago. So I want the assets under management to really push. And that for me is Hayvn turning into sort of the next Coinbase when it comes to a public market, but us focused much more on the institutional space. So that's the game plan for me. That's why you won't see me on any CEO awards or any of that, Walid. Just quietly, I think my board and my shareholders nominate me as CEO of the year. They seem happy at the moment, and we continue to sort of grow and build revenues month on month. We don't have a prop trading desk. We don't do leverage. We don't do anything that can risk the firm. We take care. We call her Mother Hayvn. So we take care of Mother Hayvn because she feeds everybody. And we're very careful as to what we do as a business, because our industry is full of examples of people that promised the world and
didn't deliver.
And when the music stopped, it was all pretend. So that's why I've got a core focus on revenue, because I can tell you any story you want to hear, that when the minute I start showing you revenues as an investor, as anyone, that's credibility right there. So that's our approach, and that's the way I'm sort of building the business and running the business, Walid.
Thank you so much for being this open. Thank you so much.
Hey, it was a great chat. Thanks.
Thank you so much for a non-traditional kind of a discussion. So
I thought it was traditional.
Yeah. So I'm looking forward to meet you in person soon. Thank you.
Me too.
Thank you.
We'll do that soon. Thanks, man.
Thanks.